What's up, folks? Audio should be fine. Everything should be working. So I would say let's dive right into the charts, shall we? So give me a second. Remember, guys, today is NFP at 2 p.m. from 2 to 2:30 p.m. We expect NFP, or not NFP or FOMC, bro. I'm kind of. Wait, give me a second. Bro. Is it NFP or FOMC? FOMC, sorry. My bad. I don't know why I thought it's NFP. Okay, so FOMC 2 to 2:30 p.m. Yeah, therefore today's New York session is kinda low probability, but we'll see. It's going to be mainly a live tape reading session, but we'll see how price action is going to be and what market is going to give us in terms of price action. So yeah, I guess let's start with the analysis. Starting off at the high time frame, we do a brief high time frame analysis to determine our bias. Yesterday I already told you that we are more likely to see lower prices. Why? I'm going to tell you right now why my bias is rather bearish. So last week bias was definitely bullish, took out sell side here, and had this weekly volume imbalance that we were trading up into. Okay, but today's trading session, yeah, it's difficult to say because NFP obviously later on can do anything, so yeah, we can just determine our bias for today's New York session from 9:30 to 11 a.m. Whatever happens afterwards during FOMC, bro, this, yeah, as I told you, FOMC can do anything. Okay, so yeah, we actually have, or bias was actually for this week to trade up into this daily fair value gap right here. And last week on Friday we failed to trade up in here, which is okay because last week was TGIF, so we were likely to have a little retracement down into the last weekly range. So that's actually permissible. So we were expecting higher prices on Monday, and we failed again and failed now twice to go into this daily fair value gap, which is actually weakness. We also were rejected from this rejection block here. Okay, price gapped above, but as you can see, price didn't close strong above these highs, just wicked them out and traded all the way back down and closed here. Okay, so since then we are kind of ranging. Oh, what's up, Timo? How you doing, bro? So yeah, it's kind of difficult. We are in between this daily fair value gap and this daily fair value gap, or even this inverse fair value gap here. So yeah, kind of hard to tell if we go higher or lower. Yeah, definitely mark out this premium wick quadrant levels and this rejection block, the close of this daily candlestick. Okay, so yeah, let's drop down into the 1 hour. On 1 hour is a little bit more clear because we have relatively equal lows and relatively equal highs on the buy side, which definitely could be the target for today's FOMC statement later on. So yeah, that's also another reason why it's low probability. We have relatively equal highs and relatively equal lows on either side. So yeah, there's no clear draw. Okay, we don't know if price wants to go for these highs first and then go for these lows, or the other way around. So yeah, we're kind of ranging in between. And yeah, as you can see, we got rejected off of this daily rejection block here twice, once here, second time here. So yeah, this PD array is kind of holding price lower. So what's up, Timur? Yeah, bro, bin gespannt. Yeah, let's see what today's New York session is going to give us, bro. It could be really trash as price action in today's New York session, bro. But I don't think it can be worse than yesterday's price action, bro. Yesterday's New York session was horrible. I tell you, bro. I haven't seen this in a while, so yesterday was dead as boring, and a lot of people were stopped out yesterday, and yeah, yeah, bro. Bro, yesterday was, oh my days. I don't know. So yeah, how was your trading week, Timur? How are you doing? Okay, let's maybe continue with the analysis. So that's it. That's a 1 hour chart. 15-minute charts kind of looks the same. Lows here, highs here. Yeah. Whenever you're in these types of conditions where prices held in a range, okay, where prices more or less in a consolidation, what you can do is just mark out the liquidity pools who are in close proximity to price right now. So let's delete the daily PD array here. We have London high, London high, okay. We have London high, okay. We have pre-market high. Oh, nice, bro. Bro, gold, I gotta be honest, I didn't really pay much attention to gold right now. So we have pre-market highs. What do we have? Okay, we have PM session high. I explain why I'm annotating this PM session high. Most of you think, oh bro, this liquidity pool has already been engaged with, but yeah, I show you how I'm using it nevertheless. PM session high. Okay, PM session low is kind of unnecessary, and we have pre-market low. Okay, that's a range we are in right now. Pre-market low. Oh, come on. Bro, bro spamming likes. I love you, bro. Bro, TikTok, I really have, like yesterday we had like 150 views, but yeah, I don't know. I had like 3 to 4 views at once at most. But most of the times there's one guy or girl viewing life, but yeah, we got to I don't know, be patient. The algorithm, yeah, the algorithm has to push my live stream on the For You page. Okay, so this is how it looks on a 1 minute. So why did I annotate the regular trading hours? The PM session high is because of the regular trading hours chart. As you can see on RTH, when you're trading futures, you can toggle your charts and switch between regular trading hours and electronic trading hours. And this is the high in regular trading hours, okay? So that's important. But we are obviously trading right now around here on electronic trading hours, so we already engaged the sell side here. So yeah, next sell side is pre-market lows. So I guess we have a discount opening range gap. Yesterday's 4:14 p.m. close was here, and maybe I seems like we open at 9:30 around about here, so we have a small discount opening range gap soon in 4 minutes. So yeah, let's see where we open, and yeah, as you can see, electronic trading hours is trading around here. We have relatively equal lows on the downside and relatively equal highs in London here buy sides. So yeah, this is kind of trading without a bias, at least not with a higher time frame bias. This is just, I guess this trading session is just going to be trading in a range bound market conditions. So yeah, you can just trade liquidity to liquidity pools. They are not likely going to be like sustained one-sided, one directional runs. So yeah. Timo, what do you say? What's your bias for today? Hmm. What's up, guys, on TikTok? Okay, so 2 minutes left to New York Open 9:30. I prefer not to trade today. Okay, kind of depends on price action. Later on is FOMC, so for all the beginners out there, I wouldn't definitely not recommend you to trade the New York session on FOMC day or NFP day. But yeah, if you are kind of more advanced and have some experience, I don't know, you can see and make a decision depending on the price action. So we see. Gute Frage, ja. I'm contemplating if I'm live streaming also later on during FOMC. To be honest, I never touched like an FOMC trading session, PM trading session. So yeah, I don't know. Okay, 9:30 open here. That's our opening range gap. And yeah. Let's see. Pre-market lows underneath. Okay. Um, Seems like we go for sell side first. Fail to trade up into consequent encroachment. Hmm. Okay. So let's see. What is ES and what is Dow doing? Um. So okay, NQ now took out pre-market sell side. ES is approaching pre-market sell side, and Dow is kind of moving sideways right now. Okay. Okay. So pre-market sell side taken. Let's see how price is willing to take out this low as well. First percent fair value gap hasn't formed yet. Hmm. Okay. 5:30 a.m. low also swept. Hmm. Okay, so took out the low. So I said liquidity taken. We are trading inside of the daily volume imbalance. If you go back to the daily, you should annotate this daily volume imbalance. It's just a new day opening gap. So as you can see, price was supported and rejected from a numerous times. As you can see here, here, here. Let's see. Bro, Timor, nobody's. I don't know why nobody's joining on YouTube. Okay. Oh, Dennis. Dennis from Discord servers joined YouTube. I don't know, bro. It's bullshit. Bullshit price action again. A YouTube algo is trash. But like YouTube, like people on TikTok, bro, they don't go on TikTok to watch a trading live stream. You know, the attention span is just too short for all these TikTok people out there. So, bro, they just come into the stream and then they leave again. So, I definitely need to build a community on YouTube and not on TikTok. At least not for live streams. Okay, so that's first percent for value gap. We delete the new day opening gap here. So first percent is fair value gap here. Let's go back to regular trading hours. Bro, we have this sell set on regular trading hours. So that could maybe I don't know, it's difficult market structure. Difficult to say where's price going to go. So opening range gap here. Well, Timo, haven't you seen you in the gym for a while? What's up? Hmm. Hmm. Okay. But recently, like at I don't know, 11 a.m., 12 a.m., like German time zone. Bro, the gym is empty. Much better to train in the morning than in the late afternoon. Bro, I gotta be honest, I have no clue where price wanting to reach for as of yet. Let's see on the 50-minute chart. Still relatively equal highs above. Now we formed another relatively equal lows here. Bro, this market structure is also just, I don't know. Price took out this low, price took out this high. Okay, so we're in between this low and this high. Now we've taken out this high. So I would rather, I guess, we are more likely to take out this low now. Maybe. back to the 5 minute. So okay. So now we inverse this first percent fair value gap on a 1 minute chart. Bro, kind of looks like yesterday's New York Open. We had yesterday. We had also the opening range gap above, and first presented fair value gap below, and we spent like the whole entire session in between these two pedal rays, bro. It was horrible. So I hope it doesn't end like yesterday's New York session, bro. Look at here. Give me a sec. Here, opening range gap. Yesterday's New York Open. That was the opening range gap. Here's first percent fair value gap, okay? And price was just spending all entire session long between these two pedal rays. Bro, what is this? Come on. Let's see. If we are able to close above the opening range gap, we may see a continuation higher into these highs here. But nothing I would bet any money on. So, bro, Timo, what are these dollars, like these? I don't know. When I look at the live stream, at your name, beside your name, I don't know. They are like $10 or whatever. Not dollars. What is it? They aren't gifts, aren't they? I don't, bro. I don't know. Yeah, me too. Okay, so I don't know how the all of these gifts and presents on TikTok live stream work, or even what they are. All these roses, people spending roses. I guess in the end of the day, it's like money. I don't know. Maybe like subs on Twitch. I guess. Maybe. I don't know. Okay. Yeah, okay. If you extend yesterday's first and fair value gap, we kinda reversed from here. Okay, I think there's a volume balance. Let me check. Yeah, a tiny one. Okay, that's yesterday's first and fair value gap, and if you extend it to the right, we reversed and got support from it. Okay. So yeah, we are inside of yesterday's and today's opening range gap. Okay, we are still in between this range. So from low to high. Um, if we had taken this low out, maybe it would be reasonable to look for longs. But I'm not too confident on taking a long now. It's kind of too bro, it's just 50-50 in my opinion. Can you hit the song? Softcore trust. Bro, I don't know. And like when I last Monday I played a song in the beginning of the stream, and afterwards, like I got a warning from YouTube, like copyright and stuff. I don't know which song I am allowed to play and which not. So maybe you can help me with that. I think I'm only allowed to play like YouTube library songs, but I don't know which song. Maybe I should just go to YouTube library. Um, yeah, I gotta figure that out. Maybe in the next live stream. I think I can do it during the live stream. I don't know. Can I? True. On YouTube, you can stream songs. Yeah, I guess I can. I don't know. You mean on TikTok or what? Yeah, because I was already thinking about like adding a song to the background so it's not too boring and you have something to vibe to. I don't know. Because watching this kind of price action is just boring, bro. I cannot even read price action or tell you where it's wanting to go or watch this PD array or this and that. Bro, it's just difficult right now. I'm not holding any bias. We have highs and lows above and below. Kind of in a consolidation on daily, so. Yeah. Okay, rejected off of the opening range gap midpoint to the tick. Wick higher, closed at the midpoint, so. Well, I bet you not Timo went long in this inverse Valley gap. Are you long Timo? Or not? Okay, Timor is not long right now. The Valley gap's above. Which one do you mean? I mean, we have 935 first percent for Valley gap. Yeah, maybe on a 5 minute. Yeah, we have this for Valley gap. 2 and 3 minute. Okay. Yeah. Okay. Hmm. I don't know. I mean, we have a potential order block here. We have an inverse for Valley gap here on the 3 minute. I wouldn't take it personally, but I guess that's your model, Timor. I don't know. Okay, let's see. Inverse for Valley gap, 3 minute. Trade it down into midpoint here, but closed above. Okay. Yeah, I wouldn't be long either, but I gotta say, price actions actually is fine. It's okay. I mean, we don't have low resistance liquidity runs, but yeah, we don't have the type of consolidation we had yesterday. So yeah. Hmm. Ah, come on, bro. Why can't we just break out either on the upside or downside, bro? I don't want a whole entire trading session again between those two PD arrays. It's fucking boring. I mean, when you look at the 1 hour chart, bro, you cannot tell me you're favoring one side, bro. It looks like a barcode. Like, I don't know. I've never seen this kind of bullshit, like 1 hour market structure. What the hell? Ah. Huh. I mean, these types of market conditions are good to forge discipline, are good to, I don't know, train your patience. I mean, you gotta be patient. You can't tell me there's a model or like an opportunity to go long or short from right now. I mean, I guess you can go long or short whenever you want and see everything you want to see if you um, are looking for something. If you're looking for something, then damn it, you're gonna see what you want to see. Hmm. I mean, if you have another look on a daily, um, as I told you in the beginning of the live stream, we have this fair value gap, daily fair value gap above us. Okay, Fade wants to trade up into it. We took out this high here, which is the 20-day look back. Okay, I have an indicator actually for it, so it just makes it easier. This is showing the last 20 days, the range of the last 20 days. Here's the low, and that was the high, and we actually took out the last high here. Okay, and we failed to trade up in here into the daily fair value gap above us here, and we failed to reach up into it on Friday and Thursday. And look at this rejection block. The closing price of this candlestick, we traded up into it and got rejected from it again. Okay, So I mean, I think it's still 50-50, but I'm rather looking for sell sides. I'm looking for lower prices actually. At least we trade down into this previous order block, or yeah, into this daily inverse fair value gap, or this. I mean, we have a unfilled portion. This fair value gap has been traded to here, but this portion of the fair value gap is still not traded to, so it's inefficient. So we might also see a deeper retracement like I anticipated in yesterday's live stream. Yeah, we also have a volume imbalance below here, but I think that's too far away for now. So next target on the downside, at least at the daily, would be this inefficiency. Because what is price doing? According to ICT, price has only two options. It either goes to liquidity or inefficiency, okay? So, for example, here on a daily, we went up to an inefficiency here. So, what is coming then? Liquidity, okay? Inefficiency, next up, liquidity. Where's liquidity? Here. Trade down into this liquidity pool, done that. Swept it. Next goal, inefficiency again. Traded up into this inefficiency here, fair value gap, extended here, trade up into it here, and this huge weekly volume imbalance, traded up again here, okay? So then from inefficiency to liquidity again, and now inefficiency. So that could actually be a draw. So if price, and as you can see, opening range gap respected. This portion of the opening range gap is unfilled. Okay, that's a weakness. Another indicator for weakness is look how price traded up into opening range gap, but it stopped at the opening range gap midpoint. Okay, traded outside of the opening range gap below it. That's a high probability order block. Respected the order block and traded down into first percent fair value gap. Now, in order to see even lower prices, we would want price to close below the first percent fair value gap. So that's a propulsion block. What is a ICT propulsion block? A propulsion block is just an order block that is inside of an order block. So since this is a high probability order block and price traded up into this order block here, that's also a propulsion block. So now if we are bearish, you should just see some type of movement lower. And normally whenever you trade up into an order and into a bearish propulsion block, and price repels lower from it, you see speed, okay? And looks like we see some speed to the downside. Still have this SASA liquidity pool here on the downside, so that could be the next draw on the sell side. Timo, do you want to rather look for shorts or longs? I mean, I guess you rather look for longs, but I don't know. I don't know. Still, buy side is intact. Yeah, bearish. I don't know. It's still in between these PD arrays, so if we are able to take out this sell side, I wanted to say if we take out this sell side, I think that price will stay below this first percent fair value gap, and we may see some continuation to the downside. But yeah, since we are in this type of consolidation, I mean, I guess we could see this asset liquidity taken and then see a run higher. Bro, it's just we are just not in like market conditions where we expect or can expect like sustained one directional runs. So yeah. Bro, I mean, look, if we are bullish, this sell side technically would have been enough to go for buy side, but we didn't. Okay, we traded lower, 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 failed to trade down into this sell side. Okay, and now premium arrays like this opening range gap are holding price lower for now. So I would rather see this sell side taken. Traded up into propulsion block again. That's propulsion block open. That's a low. You can also use a low, as you can see, respected it twice now. Bro, I'm definitely looking forward for next year. December and also the beginning of January is always difficult. Bro, we have so many holidays, bank holidays, high impact news, data releases, and reports. I mean, yeah, I see he's kind of smart. He always ends his trading year like in the end of November because yeah, December is trash. January is usually also trash, and yeah, February is kind of the month where you can see some beautiful price runs again. Not saying that you cannot trade during December and January, but you are more likely to yeah be confronted with this kind of market conditions. Yeah. So yeah, traded up into opening range gap. Bro, come on. It's it looks Definitely the same. Look at, okay, memorize this quickly, okay? Inverse first percent fair value gap, trade up into opening range gap. An opening range gap, technically, you could have scalped and went short from this propulsion block down to the first percent fair value gap. Bro, that's a trade I outlined yesterday. That was the, no, not the only, but that it was the, like, yeah, I think, yeah, only trade that you could have taken, or that I at least outlined, that's made sense to me. So I told you, okay, we are looking also rather for bearish prices, and we price also respected the midpoint of yesterday's opening range gap. Okay, so that's an autumn block. That's a high probability fair value gap, and I told you, okay, what you could do is take a little scalp. It's not my model, or at least the market conditions. I'm not willing to risk anything on it, but that, yeah, that's actually a trade that you, a scalp that you could have taken. Okay, from this fair value gap to the first presented fair value gap high, and it actually went to the tick to the first presented fair value gap high, also inverse fair value gap, and then we entered consolidation. And I mean, kind of looks the same. No, I don't know. Hallo? Nee, ich bin zu Hause. Ich hab's nicht gesehen, warum? Ja. Ja, ich bin zu Hause. Aha. Ja. Okay. Ja. Okay. Ciao, ciao. Mm, mm. Okay. Ciao, ciao. Sorry, guys. Short interruption. Bro. Timo, what do you say? Yeah, it's boring. Now you can imagine how I felt yesterday. Horrible. I guess we enter some kind of consolidation again. Bro, I can join my own live stream, bro. Okay. Oh, bro, still 45 minutes left until the session ends. Look how the daily looks, bro. We're just consolidating in between, or not in between, inside of this fair value gap, this weekly volume balance. Yeah. I mean, kind of looks like here, and yeah, the reason why we had this price action is just this volume balance. That's a huge void of any trading. Okay, so in order for the algo, the market, to make this area efficient, because it's lacking in buy side and sell side delivery, you have to imagine like a how did ICT like, and ICT made an analogy where he said like, you have to, when you paint your walls, okay, and to make sure the paint is distributed equally everywhere, you paint several times over and over a particular area on the wall, and this is kind of the same. Okay, here is no paint at all, so you want to distribute the paint on top of this hole. Okay, this void of trading, make it efficient, and then price left it. We came all the way up again inside of this one imbalance. Yeah, it is already efficient on a daily, but it is not, it at least it wasn't efficient on the weekly chart, because on the weekly we only had sell side delivery, so it's still lacking in buy side delivery on the weekly. Now here last week we laid a bullish up close weekly candle on top of this weekly volume imbalance. So now that's efficiently delivered, but it could still, to make sure, just print another bodies, several bodies on top of this weekly volume imbalance, and then making it a balanced price action. And then we see if price is leaving this price action to the upside, we are more likely to see continuation to the upside, because this is already balanced. Okay, so price has no need, if price eventually, I don't know, in next week, daily candles, just hypothetically now, okay, just hypothetically speaking, if next week, next Wednesday's daily candle closes here, for example, this whole area is balanced, so price has no need to trade all the way back down. So we are more likely to see a continuation to this week, to this daily fair value gap, this volume imbalance here, here, and these highs. Vice versa. If we paint, if we lay bodies on top of this weekly volume imbalance and then leave it to the downside, same thing here. More likely to draw down into this daily fair value gap, specifically this portion that is still unfilled because we traded down into it once. So this portion of the daily fair value gap is unfilled, so inefficient. So we could see a retracement down into it here, or this daily volume imbalance, okay? Yeah, now you've learned something in regards how to navigate through like volume imbalances on a daily and weekly chart. This is something actually ICT recently taught in one of his last videos. So yeah, definitely check them out. Timo, what have you actually watched in terms of like ICT mentorships? We talked about it in like gym a few weeks ago, but yeah. Did you continue watching the mentorships or? Okay, back to the intraday chart. 1 minute. Come on. The first 10, 12 from this year's mentorship, 2025. Bro, because what he has revealed are 2022. Okay. Because what ICT revealed this year it's insane. It's definitely insane. So I guess maybe it's kind of difficult for you to follow what I'm saying sometimes when I mention all these propulsion block, opening range gaps, suspension blocks. I guess you don't know what I mean by that, don't you? Yes. Okay. Okay. But like, aren't you interested in learning this? Because I don't know. For example, yesterday's live stream. Afterwards, after I ended my live stream, I watched several traders live streams, and what I did was they went short here, targeting these lows. They got stopped out. Went short here, inverse fair value gap, been stopped out eventually here. And they also got stopped out when they went short here, okay? And if they were just aware of the opening range gap and, I don't know, learned more about ICT concepts, they would have just avoided like 2 or 3 losses. So, I don't know. Just the concept of the opening range gap, bro, it tells you so much in terms of like information where price is wanting to go and where it is not wanting to go. That's even more importantly, because first rule in trading is preserve capital. How do you preserve capital? You do it by knowing when not to trade, okay? And definitely I know prices between this opening range gap and this first percent fair value gap, everything between is kind of, I don't know, not doesn't look interesting to me. Just looking at this moment of price action. Of course, if you zoom out and go to a 15-minute chart, then you see it's still ugly. But yeah, it could look beautiful and maybe have a clear draw on the buy side, we would have had, I don't know, relatively equal highs, hypothetically speaking now again, relatively equal highs on the buy side, taking sell side liquidity, for example. So on a 50-minute chart, you would definitely be like, okay, yeah, we are definitely bullish, targeting these relatively equal highs. Okay, that would be another scenario where you could have just ignored the opening range gap, and maybe you could have just went long on inside of this 3 minutes fair value gap here. But yeah, in that case, the opening range gap, you would expect price to anticipate price to inverse this opening range gap and target these hypothetical relatively equal highs on a 50-minute, okay? But since we have no clear bias on high time frame and not even the 50-minute chart, you just have to work with the information given on the 1-minute chart. And bro, if you don't have, and if you are not aware of these PD arrays, I guess you could have thought, okay, you go long in here, okay, stop loss here, target here, and you probably been scared when price traded down into here, and maybe you aborted the trade or still in the trade at a break even. Okay, bullshit. Maybe you could have viewed this one as a short, went short here or here. But if you wouldn't be aware of this opening range gap, I guess you wouldn't see this as an order block. So maybe you wouldn't have viewed this as a short opportunity. So I don't know. What I try to say is ICT concepts definitely give you like an how do you say like an X-ray view, okay? That's the word I was looking for. And like gives you a map, so you know what to look for, what not to look for. So yeah, it also kind of makes things complicated. So that's something I found that's something I had hard times with, because like a month ago, or like a month ago, I had so many things I was watching simultaneously, so at the same time, that I forgot and did not pay attention to actual raw price action. I was just looking at all these opening ranges and all these levels and blah blah blah. So you have to stay focused and don't lose sight of price action. In the end of the day, that's important. Okay, how is price reacting to fair value gaps? Is it leaving a portion open or not? Because, for example, if let's make a scenario, okay? We have relatively equal highs on the buy side. We have taken sell sides, and we had a market structure shift to the buy side. Now, what do you want to see? Okay. In that scenario, for example, here we had a market structure shift. Maybe there was a fair value gap here. What you want to see in order to confirm bullish order flow and see higher prices, if there was a fair value gap here, you want price to trade only into the upper half of the fair value gap and leave a portion open. That's how we know, okay, you can anticipate some speed to the upside. Bro, actually nothing happened still. So Huh. Bro, this is just pointless. Buy side still intact. Relatively equal highs here. Pre-market highs, London high. Bro, I don't see higher prices. I don't know. I got no clue what price wanting to do. I guess. Bro, I don't want to end this session beforehand. Obviously, still there's half an hour, 30 minutes left. But it doesn't look like we see a run on buy side or sell side. I don't know. At least not right now. Bro, Timo, I don't know what happened to my videos. Like the last two videos I uploaded on YouTube. 8 views 1 day ago. 20, 20 views 2 weeks ago. Bro. Oh, what's up, Premium? Thank you for the follow. Kind of frustrating. Also, YouTube, nobody's watching. Oh, no, wrong. Somebody joined now. But nevertheless, we just keep grinding. We just keep live streaming, guys. I know. I just gotta stay patient. Yeah, bro. And in the end of the day, you just need to. It's like the gym, you know? You can expect to build muscle in the first 2 weeks, 3 weeks, 4 weeks. Okay? So it just needs some time to build muscle or build your community. I don't know, whatever. I mean, trading also isn't like too much of an entertainment. And I guess if you play Fortnite or Call of Duty, maybe some more people would be watching. I don't know. Also, these type of environments with this December price action, I mean, me myself, I would just rather like lay in my bed right now than just looking at this shit bullshit price action. So definitely appreciate that you are here, and I'm not talking to myself. Damn, bro. It sounds okay. Maybe we see some movement now. Timo, you're looking at CFDs, aren't you? You're looking like NAS 100. You're actually not trading Enki, right? So you're not trading futures. Yeah, okay. So, bro, you probably be thinking like, what the fuck is he looking at? This regular trading hours, but on CFDs you don't have these regular trading hours. But if you're interested, just go to, for example, I'll just make a case for you, okay? If we go now to NAS 100, okay, for example, Pepperstone, I don't know which broker you're trading through. So if you go back to yesterday, what day is today? Wednesday. Okay, if you go back to yesterday's 9:30 open, sorry, what? No. Today's Wednesday, 9:30 open. If you go to Tuesday's 4:14 p.m., where is it? 4:14 p.m. 4:16, 4:14 open. This candle's close, sorry, is here. 4:14 p.m. This candle's close is here, okay? Now this is for everybody who's wanting to trade with ICT concepts. And it's not trading futures, but it's trading CFDs or Forex or whatever, okay? You go back. In order for you to draw the opening range gap and work with these levels, you can just go back to yesterday's 4:14 p.m. candle, go to its close, extend it to the right. Now you go to today's 9:30 opening, which is here. 9:30 open, okay? Now you don't have a gap like me in the futures, okay? In futures, you can toggle and switch between electronic trading hours and regular trading hours. The difference is just that on regular trading hours, you have this gap. It doesn't show any price action between yesterday's 4:14 p.m. close and today's 9:30 open, okay? So you just see the New York Stock Exchange trading day from 9:30 open to 4:14 p.m. close. If you go to electronic trading hours, it shows you the whole day, okay? But on NAS 100, for example, you don't have you cannot switch between electronic and trading hours and regular trading hours. You just have technically you have electronic trading hours, which means you just see a chart that shows the whole entire day. Yeah. Then you just grade this whole area from 9:30 open to 4:14 p.m. Okay, so now NAS 100 is not actually exactly mark to market the same like NQ, but you see it kind of looks the same. But you can still use these levels, the opening range gap, um, for your information to read price action. Okay, so there's your first presented fair value gap, and this is the opening range gap. Same thing as you can see. Price usage here, opening range gap upper quadrant, opening range gap lower quadrant, lower quadrant used here, opening range gap low used here. Okay, for example, you could identify this as a high probability order block here. Why? These two consecutive up close candles took out these highs here and originated from this lower quadrant. Okay, every PD array that lays on top of an opening range gap quadrant level, for example this quadrant level here, or a new day opening gap quadrant level, or a daily fair value gap quadrant level, these PD arrays are high probability fair value gaps as taught and defined by ICT. Okay, so that's a high probability order block. And as you can see, price used this order block and this opening range gap, and look, this whole move originated at this opening range gap low inside of this order block. Okay, same thing for new day or new week opening gaps. For example, if you go back today's 5 p.m. Where's 5 p.m.? 5 p.m. See if, I don't know, see if this is open 24/5, okay? Or is it? I don't think you have 1 hour where price is not trading. Have you? I think CFDs and Forex is trading the whole day without any break. Okay. If that's a scenario, if that's the case, I guess it is. But wait. Okay, wait, let me see. Yeah, 6 p.m. he's here. Okay, no. Sorry. In the CFDs you also have 1 hour break, okay? So today's trading session opened at 6 p.m. This is where the daily candle opens. If you go on a daily chart, you can see that's the daily open here at this open here, and this is yesterday's candle's close. And if you extend the close to the open, that's your new day opening gap. Okay, and look how price used it here, 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 inside of here, this run. Okay, here went all the way through, again used it here, and use it here, accumulated here, failed to trade up in here. That's weakness. Bam. And yeah, Just some tips for you guys who are trading CFDs or Forex. You can also use these levels, okay? So we are below the first percent fair value gap. So let's go back to MNQ. So just Nasdaq, like Nasdaq 100, but it's just the future. And MNQZ, Z stands for like Z in zipper. It's just the front contract month, December. Okay. So if you want to trade futures, you cannot trade MNQ or MNQ. That because hey, MNQ. Yeah, here. That's MNQ without like a Z in the end. At the end, okay? So that's a continuous contract. And if you want to go to trade live on a broker, you cannot trade the MNQ one because that's a continuous chart, okay? If you want to go to a broker trading to trade futures live with live money, you always have to trade the front contract month. And for this month, it's December. Z is the December contract month, okay? So Z 2025. Now we are below the first percent fair value gap, okay? I rather wanted to see lower prices. Now we have lower prices. Can we do something with it? That's a question. So another rule or tip, how to use inverse fair value gaps, okay? ICT says this, okay? If you have a fair value gap, for example, this one, okay? This is not the first one fair value gap, but this is an inverse fair value gap, okay? Or can act as an inverse fair value gap. There's a volume imbalance below, so you always want to include the volume imbalance in your fair value gap, okay? So in order for price, okay, there it already is. If you want to anticipate and predict this as an inverse fair value gap, when price trades below it, now this buy side imbalance, sell side inefficiency which is just a fair value gap but a bullish fair value gap. When this fair value gap is traded through it, now in order for price to prove it or confirm it as an inverse fair value gap, you want to see price go below it, trade to the midpoints so you don't want price to trade all the way back up into the open in the upper half. So if price trades below it and only trades up into the lower half and then leaves it again, leaving another fair value gap behind here, that's a fair value gap you can use to go lower from. Now this is the rule ICT gives for and lays out for inverse fair value gaps, okay? So inverse fair value gap, you want prices trade through it, then at a maximum trade into the lower half or midpoint, not higher. At least the body should not trade higher, okay? Body should below it or at midpoint, close at midpoint. And then you want to see price leave the inverse fair value gap again. And if price creates a fair value gap while leaving it, that's a fair value gap you can use to go lower from. Okay, this is how ICT teaches inverse fair value gaps. And as you can see, price closed below first percent fair value gap. So when below it, was not able to trade into the upper half, which is what we want to see. We want to see price trade up into the inverse fair value gap, only use the lower half and then leave it again, close below it and leave a fair value gap behind. But as you can see, price didn't. So there's no sign to enter shorts. Okay. That's a rule or something that beginners definitely should have in mind. Of course, if you are more advanced, if you are more experienced, okay, you can employ more aggressive techniques. Are you short, Timur? So we have a consolidation here. This should act as a breakaway gap. Okay, if we are bearish, we don't want price to trade up into this fair value gap. If price trades up into this fair value gap and completely fills it in, so it can wake up into it, but you don't want a wick or bodies lay on top of this whole fair value gap. Okay, it trade up into here, for example, it can trade up into the midpoint, for example, or wick up into even the high or the upper quadrant, but bodies should close below. Or no, it should not trade up into the high. Okay, so it should leave a portion open. That should be that's a breakaway gap. Okay, and if we can see a portion left open, that's a sign that we may see even lower prices. Okay, and as you can see, okay, that's not a breakaway gap. So if price again closes above the first percent fair value gap, we are again inside of this range, which is, yeah, kind of no man's land. Okay, so I don't know. Okay, we took out 930 opening range low level, but we had sell side in close proximity to it, and price didn't want to take it. So still left sell side intact. Okay. Huh. Bro, I mean, look at this 5 minute. What is it? Like, whatever. What is this? 15 minute. Bro, come on. This is bullshit. Okay, since we have not left a breakaway gap here, it still can go lower, but the probability that it goes lower falls off precipitously, okay? So, yeah, this is kind of how you read price action as taught by ICT. Also, like I said in the beginning, we are not likely to see sustained one directional runs to either buy side or sell side today. Why? Because we are just in a range bound environment. What I mean by that, we are just consolidating, even on a daily. So it's not an environment where you want to see or where you should expect huge one directional runs. Okay, so yeah. Yeah, bro. I think today's session's over. This is definitely bullshit. Oh, Mohammed, what's up? Are you trading futures? Yeah, this kind of price action is horrible. I guarantee you today's New York session um, cost people a lot of money today, okay? Okay, let me take a guess where people got stopped out today. Definitely, people thought that's a long here. Okay, so I guess maybe after today's live stream, I rewind other people's live streams and look what kind of trades they took. So I definitely I can almost guarantee you people went long from here, from this fair value gap, and if they were smart, they took partials here. Not too likely that they did. So most of them probably got stopped out here. Um, Shorts, I don't see people seeing this move as a short, so that's not too likely that people took this one as a short. Um, I don't know. Maybe they tried to go long from here once again, inverse fair value gap here, order block here. So maybe they tried to go long from here. Yeah, stopped out here. Okay, there you go. So we didn't leave a breakaway fair value gap behind, but still move lower, use first percent fair value gap high as a first, no, actually that's not first percent fair value gap, but actually ICT told us to monitor first if first percent fair value gap is a bearish fair value gap, which it is here. You should also monitor the first percent of fair value gap that is a bullish fair value gap. Okay, so yeah, I guess this kind of also is a first percent fair value gap. ICT didn't teach too much about it yet, but I guess that would be the first bullish fair value gap at least. So price used the high of it here, cut a little bit outside of the lines here, and then move lower. Okay, lower prices. There you go. Now, where's price wanting to reach for? That's a question. Hmm. Okay, price to go outside here. So um, yeah. As I outlined before, we are not not in an environment where we are likely to see one directional runs. So therefore, I wouldn't go short from here. We took out sell side, so we could see a market structure shift now. That could happen. It's kind of 50-50, so it's not. Later we have FOMC in a couple of hours. So yeah. What is the S actually doing? So S&P 500 is, we actually have an SMT. Okay, so if you look at this low in NQ, NASDAQ, and this low, we have a lower low. And now if you go to ES, we have a higher low, okay? And okay. If we go now to Dow, price just Dow just took off to the upside. Completely ignored what S&P and NASDAQ did, and just yeah, kind of made its own thing. So MESD, S&P 500 looks even uglier than NASDAQ. I mean, that's FOMC days. What's up, Lynn? Appreciate you guys are here. Mohammed, Lynn. Timor, what do you say? That day's been horrible so far. Holy shit. I'm also live on YouTube, guys, so if you want to check out my YouTube channel, definitely would appreciate that. If you're interested in more trading content or live content, and even like live execution videos or tips in terms of like reading price action using ICT's concepts. Oh, Corbin, what's up? Okay, goodbye. So what is XP? Okay. Yeah, and you were out. Yeah, bro. Me too. 10 to 11. Silver bullet's over now. So I guess that's it for me today. I thought about live streaming today's FOMC session, but I don't know yet. We'll see. Yeah, trash ass New York session today. But it kind of was obvious, of course. FOMC's later on, so what should we expect? So definitely appreciate you here, Timur and Lynn. So I guess that's it for today. I catch you tomorrow on the next live stream, and maybe Timur. I don't know if you are able to be there tomorrow, but yeah, we'll see. Catch you guys in the next live stream. Ciao, ciao.